Hi, all. My name is Greg, and I make videos about options trading in the stock market. Today, we're going to be doing yet another review of ARK's podcast from the other day. And today, specifically, we're going to be talking about their take on Bitcoin. So, I'm going to show you what's going on here, what they think of it, and then, of course, give my own opinion along the way. If you enjoyed this type of video, make sure to smash that like button. And with that said, let's just hop right into it.
Ren, can you hear Simon? Did we lose him?
We lost Simon, so let's move on to Yassine,
Virtual conference issues, right?
please.
Sure. Thanks, Ren. So since our last market update, Bitcoin has indeed had quite a run. I think what's unique about this breakout relative to previous breakouts is a combination of institutional momentum and adoption and strong underlying network fundamentals and holding behavior. Whereas in previous bull markets, they were either retail driven, like in 2017, or lacked the liquidity and maturity, like in 2015. This bull market seems to really be driven by institutional momentum.
He definitely has a point there. There's been a lot of articles that have been coming out talking about how institutional investors are buying boatloads worth of Bitcoin, and ARK is one of the main holders as an institution that is buying into Bitcoin and just holding what they have. So this is definitely important to keep in mind. Back in 2017, there really wasn't a lot of institutional investors being convicted enough or having enough conviction to buy into Bitcoin. And now you're getting that conviction from these institutional buyers, and this is driving the demand up, which is sending the price up as well.
In the month of December alone, we've seen a lot of really interesting, notable events that have been institutional driven. And then in relation to Bitcoin's underlying fundamentals, it really appears that holding behavior has never been more long-term focused, which brings me to the blog that we published just yesterday that really introduces a new framework to analyze and evaluate Bitcoin's fundamentals. Now, despite Bitcoin's price breaking these all-time highs, there's still several skeptics that claim that Bitcoin lacks fundamentals. Really,
I used to be one of those skeptics. I have to tell you, back in 2017, I was very skeptical, and I never ended up buying into Bitcoin because I really didn't understand it, and I really didn't understand the fundamentals behind it. But here they're actually going to explain what's going on, why the price is moving the way it is, and how it can be justified.
we think this claim is rooted in Bitcoin's inability to fit neatly within the framework associated with traditional assets. So instead of accepting that Bitcoin has unique attributes, skeptics really just deem it as quote unquote unanalyzable. And so in this blog, which you can find now on our website, it's the first part of a three-part series that introduces a new framework to evaluate Bitcoin's fundamentals, which in our view will allow investors to appreciate its investment merits. And now, in the same way that a government statistical agency publishes data about a country's population and economy, or a public company might publish quarterly financial statements disclosing growth rates and earnings, Bitcoin provides a real-time global ledger that publishes data about the network's activity in intereconomics. And this ledger is also known as the blockchain. Now, this data is completely open source, and its integrity is a function of the network's transparency. What's very unique about this data is that market participants, if they know how to analyze the data, can assess Bitcoin in more depth that is possible with any other traditional asset.
That's a really big statement. And a lot of people don't understand the blockchain, and I'm not claiming that I know either. I still have a lot of research to do into Bitcoin and to do into the blockchain. I am going to be reading through the white paper, and I think that I'm actually going to be posting a video pretty soon trying to explain the blockchain to the best of my abilities.
Now, we categorize the depth of this analysis with this three-layered pyramid, which you can see on the screen, with lower layers serving as building blocks for higher layers. Briefly, the data in the bottom layer of the pyramid, which is the focus of part one, assesses the general health of the network, and that ranges from network security to monetary integrity to transparency. This is relevant to all stakeholders and market observers. The data in the middle layer, which builds on top of the data in the bottom layer, and the focus of part two, delves deeper and segments data by wallet address. In this layer, an analyst can basically see each holder's position and the cost basis of those positions at any given time. And this is particularly relevant to long-term investors and holders who are really just trying to track the holding behavior and long-term trends of Bitcoin holders.
And the reason why that's so important is because of supply and demand. When you have all these people that are just holding on to their Bitcoin for dear life, HODL, then you end up decreasing the supply chain. And if more people are buying into it, creating more demand, well, when you have high demand, low supply, it goes up.
And then finally, in the top layer, which is the focus of part 3, is data leveraging off of the 2 lower layers. And here you can manipulate data and derive relative valuation metrics that identify short to midterm inefficiencies in Bitcoin's price. Now, this is particularly useful for active managers, where the top data layer can provide buy and sell signals in the crypto market, much like relative valuation multiples in the public equities market provide these signals. So think EV to EBITDA or PE ratios. And so in general, as institutional investors start to really gain exposure to Bitcoin and are convinced in the underlying long-term thesis, we believe that these 3 data layers are going to be core to their understanding of and confidence in the fundamentals. So recommend checking out part 1, where we really go deep into an assessment of the health of the Bitcoin network and provide net metrics for which to analyze the general state of that network.
So all the information that he just listed, I believe it's going to be in their blog. I'll try to find the link to it and put it in the description or in the pinned comment below. And also, I'm probably going to be doing a video on this and trying to explain this pyramid and how it all relates to the blockchain, because he says that all of this information supposedly is in the blockchain. So this is super important information to know if you are buying into Bitcoin or other cryptocurrency.
Great, thank you, Yassine. So now we will start the Q&A portion of today's webinar. Thank you everyone for submitting your questions. We appreciate it, a lot of great questions. So I'll stick with you, Yassine. A few questions here in the crypto blockchain space. The first is, can you explain the difference between Ethereum and Bitcoin as an investment, maybe briefly?
Sure. So, I'll start briefly with Bitcoin. We view Bitcoin as one of the most compelling monetary assets to emerge since gold. For the last now 12 years, Bitcoin has basically proven to be a highly predictable, secure, and transparent monetary network. And that enables users to store and transfer value in a global and neutral way.
So basically, he's saying that Bitcoin is mostly used as an asset, similar to how you buy into stocks. Bitcoin is kind of seen in the same way.
And so Bitcoin being increasingly viewed as this digital gold or this hedge against inflation or this really secure internet native high powered money is where the investment case for Bitcoin comes. Now, Bitcoin has made an explicit trade-off in choosing decentralization and security over features and the ability to build innovative financial experimentation on top of the underlying network, which is where the investment case for Ethereum comes in. Increasingly, if you've heard of DeFi or decentralized finance, the investment case for Ethereum is really that it becomes the backbone infrastructure on which open financial applications are built and digital assets are issued. And that Ether is the native asset that powers this economy, where people will have an incentive to hold that asset.
So basically, what he's saying is that Bitcoin is an asset, sort of like gold, and then Ethereum is a way to where you can actually buy, sell, or do whatever you want with those said assets in the crypto space.
We're currently working on doing a deep dive on the case for Ethereum, and so stay tuned for some research there where we delve into the sizing the opportunity. But hopefully that gives some context as to the main differences from an investment standpoint.
Great, thank you, Yassine. Another one for you. How does the OCC's letter allowing banks to use blockchain and stablecoins for payment influence your view on the banking industry's potential disruption, and how does that compete with Square and PayPal?
Sure. I'll cut straight to the answer and say that I don't think it competes with Square or PayPal. I think it's actually very complementary. For those who didn't read the interpretive letter or are unaware, the Office of the Controller of the Currency on Monday published a letter that addressed that all public blockchains and stablecoins were permissible as settlement networks that can help traditional banks streamline payment functions like processing, validation, and settlement. We think that this is arguably one of the most groundbreaking regulatory approvals that we've seen in the crypto space to date. That effectively acknowledges the use of public blockchains in the traditional financial ecosystem.
So this is basically a sort of validation into cryptocurrency and saying that, this is a real thing. This isn't a fad that's just going to sort of go away like it did back in 2017.
And recognizes that use as being a bank permissible activity in which banks need to recognize or stay up to date with new and evolving technologies, public blockchains being at the forefront of that. In our view, the implications to the traditional banking system and then by extension, companies like Square or PayPal, is we could very well see public blockchain networks become default settlement systems for these banks and businesses. If you think about Bitcoin as a global network that cannot censor transactions, that has a money that cannot be inflated by institutions, in a lot of ways, Bitcoin obviates the need for counterparties to mediate and settle transactions, and has proven capable of settling very, very high value transactions that have very strong security guarantees. We know Square in the past has been very vocal about its appreciation for Bitcoin and how
Jack Dorsey is definitely a big endorser of Bitcoin and cryptocurrency.
Bitcoin could fit into its existing business model. And so we expect that with this news, a company like Square is going to double down on their efforts to integrate Bitcoin into their internal settlement systems to cut costs and make transactions more efficient.
Great, thank you, Yassine.
So that's all I've got for you in today's review of this podcast. Tomorrow I'm going to be bringing you more on the electric vehicle sector. Tasha Keeney, one of ARK's analysts, is going to be talking about Apple Car and how it might not be sustainable. So definitely stay tuned for that. It's going to be super exciting to hear about. Thanks for tuning in today. Thanks for making it all the way to the end. And thank you to all my patrons for your support. And with all that said, remember to stay positive, stay green. I'll catch you in the next one. Bye, guys.